Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
And thanks for having me back on, Jim.
Ross, John, a broker in Toronto, asks, I know Ross has lobbied for years and years to reduce the number of agents who can license the Realtor trademark. This week's CBC Marketplace exposed Ontario realtors for steering buyers to homes that pay the highest commission. Does Ross think fewer realtors would solve this problem?
Guaranteed. Guaranteed, John. 100%. You need, Ontario's averaging, COVID has shrunk, annual sale, compressed about a year and a half sales into a year. So I'm not going to use, the sales numbers for this year. But at peak, Ontario is going to run around 250,000 sales, a year. Okay. So there'll be 250,000 sales transacted, on MLS systems across the province of Ontario. What that means is, you're going to have around 500,000 transaction sides. So for every home that's sold, there's a buyer and a seller. So if there's 250 homes sold on MLS systems, there's 250 buyers, there's 250 sellers. In the thousands, of course. So that's about 500,000 transaction sides. Realistically speaking, from a professional standpoint, a competency standpoint, and a consumer protection standpoint, that means you would need about 10,000 realtors in the province of Ontario. Okay, that would mean each of those realtors would handle 50 transaction sides each, 25 buyers, 25 sellers, for the sake of the argument. Now, you can imagine the level of competency that happens when all of a sudden you've got a real estate broker, because I'm going to say there's going to be no such thing as real estate agents any longer. You don't even need the realtor brand itself anymore. You only need the term real estate broker, because then the real estate broker that you're dealing with is the one who's responsible for the transaction. Now imagine the level of competency you develop handling 50 deals, 50 transaction sides a year. That means after 3 years, you've already handled 150 transaction sides. That is a lot of experience in a short period of time. 100 transaction sides for only a small percent of all the people who get a real estate license often takes 10 to 15 years to acquire. I'm talking about people acquiring it in that shorter period of time. Now, when you're doing that volume of a business, you don't have to lie to the public. You get all the paperwork signed up front. There is no steering. There's no blind bidding. There's no bidding wars. There's no new sales to listings ratio. You don't need any of that crap because you're telling people the truth. There are only 10,000 realtors in Ontario under this scenario. The level of competency the public demands is extremely high at that time because you don't see an incompetent real estate agent any longer, which is what you saw on the CBC Marketplace. Look, every single person on that show, every single realtor or outsider interviewed on that show did not fully state the context of the law for buying and selling real estate in Ontario. I mean, you have no idea, John, the incompetence that I watched on that show. And the fact that the Real Estate Council of Ontario ignored it only serves to prove me right. Because what I'll tell you is this. Buyer agency started around 1995 in Canada to be a discussion. On January 1st, 2000, we were allowed in the province of Ontario to sign our first buyer's contract. Now, there were limits what we could sign, but we could sign it. And then by 2002, we could fully sign them. And then by 2005, it was fully enshrined in law. So your Real Estate Trading Act in Ontario, called REBA 2002, was actually enacted in 2005. Okay? So what that means is, to make a long story short, for 20 years, it has been the law in Ontario that home buyers had to be told that they were paying the commission. There's no debate about this, folks. There are reams and reams and reams of pages and training where the difference between the old way of dealing in real estate and the new way that was instituted in the early 2000s, buyer brokerage. The only way you could have a buyer broker, a buyer being represented by a real estate agent, was that if the buyer agreed to pay the commission. What that means is that I have hundreds of deals working with buyers. Every single one of the buyers that I was working with or my family was working with was told up front how much they would be paying us. And our buyer client, signed a piece of paper that said, okay, if we buy a house, we're going to pay the K's or Ross 3% commission. And I, in turn, would say the following. Great, listen, folks, here's the beautiful part of this agreement. I don't care if I sell you a for sale by owner. I don't care if I sell you a brand new listing home that's being built by a builder. I don't care if you buy a listing from Royal LePage or Remax. I don't care if you decide that you want to buy a home in a different subdivision. I don't care if you want to pay a lower price. I don't care if you want to buy the house this month or next month. I don't care. Because by you signing this contract, you were saying, Ross, we trust you enough that we're going to use your expertise when buying a house that we agree that you're paid 3% commission. Not once in that entire CBC Marketplace show did a single real estate agent state that the buyer determines the commission that's paid to the buyer rep, not the listing broker, not the buyer broker from the listing broker through a cooperating brokerage fee, which is a legacy of seller beneficial real estate. The reason why that terminology and that confusion existed on that show was because there's 80,000 real estate agents in Ontario. Half of them won't even sell one single transaction this year. The average realtor is going to do about 3 deals. That's it. That's the level of competence that's in the industry. So the reason that we lobbied for years and years and years to have CREA reduce the number of people that it would license the Realtor trademark to is because we wanted to improve the competency of the Realtor brand. The Canadian Real Estate Association refused to do it. Every single turn, they refused to limit the number of people who entered the business. And over the years, that meant that those organizations continually had to cater to the worst in the business and ignore the best in the business, meaning those people who were trying their best to improve their professionalism, because the best in the business is only a tiny, tiny, tiny percentage of the market. And believe me, as I've said before, folks, you don't see the best in the business on BNN or CTV or CBC. You didn't see any of those people in that CBC Marketplace. Mike Walsh, the buyer broker who they interviewed, is over in Oakville, just a short few miles away from me. And you could see how confused that man was when he was trying to explain what his own brokerage was actually doing. So, John, imagine the level of competency that you would have if the average person who licensed the Realtor trademark handled 50 transaction sides a year. They would have their own personal assistant, probably licensed, and they would have a receptionist of some sort, a marketing and receptionist. So they would employ 2 people. Now they're doing 50 transaction sides a year. Okay, so let's say for the sake of the argument that they wanted to charge $5,000 for a buy or a sell with their client. They're going to make $250,000 per year, only handling 50 transactions. You can see the problem here, can't you? You're paying the average realtor in Ontario right now. The average real estate transaction in Ontario is almost $40,000. If you had got rid of 80% of the realtors in Ontario, well, that means that your fees could drop by 80%. Now, the flip side of all that is, what happens when the fees drop? I wonder what happens when the average commission rate on an MLS system drops. Well, considering that every MLS system across North America on peak-to-peak measurement, so excluding this compression of business that's been done because of COVID, every single MLS system has had a compound annual growth rate in average price equal to the average commission rate charged in that MLS system. This is just a fact, folks. This is irrefutable. We just did a report for Texas, the big state of Texas, because Texas is one of those rare American states where we have an adequate data set where we can calculate what's going on in that market. Did you know for 24 years, between 1996 and 2019, the average price, the way that we measure price, increased 4.5% with a compound annual growth rate. Well, guess what the average commission was in Texas over those 24 years? 4.47%. Anyone who thinks this is a coincidence needs to look at every MLS system that exists in North America, because those MLS systems are built to do specifically that. That's why we call it house price illusion. So all of that illusion goes away, John. The level of competency jumps through the roof. The silly games that you saw being played by the most inexperienced realtors, which is almost all realtors, in the province of Ontario. The one that the Ontario Real Estate Association refused to call out. The Real Estate Council of Ontario refused to call out. Like, can you believe the audacity, John? The Real Estate Council of Ontario, the provincial regulator that oversees real estate, recommended that CBC calls up the Canadian Real Estate Association. When every single piece of publication put out by RICO for the last 25 years has stated CREA has no say over the realtors in this province, RICO does. CREA is simply a trade association for real estate salespeople. RICO is the legislator, the prosecutor, the one who protects the public. But in this show, the Real Estate Council of Ontario told CBC that they should call CREA. Now, ironically, when CBC did its previous show a couple of years back about Ontario realtors, finding other massive frauds going on with the Canadian public, the Real Estate Council of Ontario never took action on that either. The only way that you can improve a system where 50% of the people in it don't make one transaction a year is to cut them off. There would be no need for home ownership advisors if there were only 10,000 realtors in the province of Ontario. There would be no need for us, because the level of competency and the lack of a need to mislead the public or steer the public or deceive the public would no longer be needed. You would not have you wouldn't have dozens of MLS systems in the province of Ontario. You would have one, the Ontario MLS system. That one system would be the place that everybody in the province of Ontario could go to see houses. You wouldn't even need a realtor.ca, because you could have an Ontario MLS.ca for the sake of the argument. There would be no need to go to realtor.ca if you're shopping in Ontario. You go to the real estate website that covered Ontario. And because the MLS systems wouldn't be chopped up into another dozen or 20 different sub-MLS systems, because you've got all these members that you want to try to service, most of who never sell one house in a year, you would have all those fees that would be cut back. So instead of having 20 real estate boards for the sake of the argument, you'd have one. Like, can you imagine the economies of scale that happens when that happens? Your local realtor would be a professional. They would not have to use the average purchase price and call it average sales price to fool you into believing in house price illusion. They would be able to come out and give you the actual number of what the housing stock in your market has changed in value and tell you that this is what you should be paying for a property. You don't need to listen to anybody else. You could just listen to them, because they would have no need to mislead you, because they're not being paid a commission contingent upon you spending more money on a house. I'll leave it with this, John. It is illegal anywhere in North America for a home buyer to sign a contract that states their real estate agent will be paid a bonus for getting them a lower price on a home. Also, in every MLS system across anywhere in North America, a home seller can walk into any real estate office, and that is the exact offer that they will be given. If you can be paid a bonus, I will pay you a bonus if you get me a higher price on my home. Why did CBC not once in that entire show ask the question, why can't a home buyer pay their real estate agent a bonus for getting them a lower price on a home? Why wasn't that question asked, John? Well, the question wasn't asked because you have 80% too many realtors in Ontario.
We'll have more with Ross Kay right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, all of a sudden it appears opinions on interest rates rising faster than the Bank of Canada promised are being talked about. Tarek in Burlington asks, it's been over a year since Ross started warning that interest rates could not be held back as much as the Bank of Canada wants to. Voices in the last week are now suggesting Ross was right. Should we be moving towards fixed rate terms on our mortgage in Burlington? Right now we're about 62% mortgaged.
You're about 62% mortgage. Okay. So there's multiple comments in that question, Tariq. Okay. Yes, inevitably, everyone is going to have to accept that interest rates are rising, and they'll be rising sooner than the Bank of Canada promised. You can go back 2 years into this show, and you're going to hear that comment. The rating agencies are the ones who determine where the Bank of Canada is going to have to go the second COVID is over. COVID is over, right? Our stores are open. Our CFL fields are filled. Our hockey rinks are filled. It is over. We're going to have to deal with whatever the situation is, but it's over. So now the reality hits home for the Bank of Canada. And they were making these commitments. They were telling regular Canadian families to trust them. We're going to be 2 years before we see interest rates rise. Here on House Street, if you listen to our shows, you heard us saying hogwash. That's impossible. That is a technical impossibility. The reason for that is that the pressure for interest rates doesn't come from the Bank of Canada. Now, it may come from the Bank of Canada while your nation is in a lockdown and you've got a government that's hiding behind a mask in their press conferences who is doling out cash to try to win the next election. Well, they lost that attempt. Although they held the House, things remained unchanged. That was a failure on their part. They wasted millions of our dollars, and now reality is coming home. A lot of things will be coming home. You have to understand how inflation really takes place, Drake. So the CPI is always a latent measure of inflation. So when we look at CPI, we always assumed that everyone understood that was yesterday's news. The inflation that's going to be reported tomorrow is already being witnessed in your store today. But I guess that's not how people have viewed inflation. They believe that it's a metric that is for today, not for yesterday. Well, we're always trying to measure inflation in the future. Okay, now we're not doing this for any other reason so that we can forecast the housing market. But over 30, 40 years, we have built up a huge network of professionals across all business types who we are in regular contact with that keep us updated on the realities of their business. And this includes your bankers. You have to remember, Burlington, Ontario has been the home to many bankers. Many of them started out in their local branches, worked their way up through the branch to manager, and then moved into head office, VPs and whatever. Okay? Many. Because of our stature in the real estate sales profession, we dealt with a lot of those people, and we're still in contact with them today. Now, obviously, you're not going to go here. You would lose everyone's trust if you started quoting names, or you even implied that any banker from any specific bank was someone who you speak to. So, of course, we don't do that. But that doesn't mean we don't know what's actually being said internally at the banks at the upper levels. You know, these people still rely upon us for their housing decision. So we have a tremendous amount of trust with these people. Our local retailers. Now, you know, when you've had dozens and dozens of clients who own local businesses and you're in contact with them, they're all giving you feedback of what the reality is. So it was back in June, I believe, when we first heard that people said, hey, you know, you guys should be buying your Christmas item because we're not going to be stocked up fully for Christmas this year. That was June. We're only starting to hear those warnings now in October. Well, that's real, folks. Now, we don't know what's happening in the shipping lanes, but that doesn't mean that we don't track what happens going through the Suez Canal, which publishes their numbers, by the way. Everybody in the world can access them. But all these sort of things make you question when the governor of the Bank of Canada comes out and says, oh, home buyers, homeowners, don't worry about mortgage rates. We're going to hold them here for 2 years. When we say, gee, that's impossible. If he did that, nobody in the world would be borrowing Canadian money. Nobody would be buying Canadian bonds. What's he talking about? So that's really what we're talking about here. Now, how that relates to mortgages, okay? So should we be moving towards fixed-rate mortgages, a fixed-rate mortgage versus a variable rate? That's what I'm assuming is what he meant. Well, I will tell you, if both spouses are in harmony on the amount of risk they're willing to take on a variable rate mortgage, then you can watch your variable rate mortgage at your existing bank while holding a mortgage pre-approval on a 5-year term with another lender, if you're both comfortable with that. Because you have to remember, 5-year fixed mortgages are going to rise. They have already been rising over the last month. You had an opportunity about a month ago to lock in at what was technically the theoretical low a 5-year mortgage rate could reach. We would need to have a policy change in this country to accept negative interest rates for that rate to have fallen any further. Okay, and we didn't hear even a rumbling of negative interest rates. So that meant your opportunity to lock in there when the spread between the 5-year fixed and the variable was the smallest. That's already gone. So now you're working on the new 5-year fixed rates, whatever is the best you're able to negotiate with your bank. What you need to look in mortgage rates is always this. Your mortgage is going to be for a 5-year term. Just look at it this way. Calculate the cost of your mortgage over that period of time. Now, when I say cost of your mortgage, Tariq, I'm talking the mortgage interest you would pay over those 5 years. Then look at whatever the mortgage interest rate you're going to be paying right now at the variable, and then build in some kind of inflator on that variable so that every 6 months you can adjust what your interest rate calculation is going to be. Now, you're 62% mortgage, you said, so to me, in Burlington, that means you probably have acquired your home in the last 3 years. So I'm also going to assume that you took a variable rate mortgage out when you first purchased the home. You probably had it around, you were probably a first-time buyer. Well, I guess you wouldn't have been if that's the case. You may, in fact, have a fixed term. Should we be moving towards a fixed? So you're looking about renewal. Okay, so I can see what your situation probably is. So what your situation probably is, you're into your 4th year of your mortgage, and it's coming up for renewal, and now you're looking at whether or not you take variable or fixed. 62%, yeah, those numbers kind of work out, don't they? So you had a high ratio, and it's no longer going to be high ratio. Okay, so you need to go back to my previous conversation. You need to look at the next 5 years after this, your current mortgage. I'm assuming your current mortgage is going to come up in the next year and a half. And you have to look at the variable, and you calculate the difference in the interest you would pay over those 5 years. If that interest differential is $4,000, that is the price you're paying for insurance that your family is still able to make their mortgage payment over the next 5 years. But I will also say to you, Tariq, that because of the way the housing market has functioned over the last 2 years, you have other options that are available to you. In other words, worst case scenario, interest rates jump. 5-year mortgage rates jump to 5.25%, the current qualifying rate with the Bank of Canada. Well, I know when you bought your house, using the scenario I just assumed from the question you submitted, that you will now qualify for any mortgage rate change that happens even beyond that 5.25%, because all you need to do is lengthen your amortization back to 25 years. This is not a bad thing, by the way, Tariq. So it gets complicated in answering this question, as you can see, but it's also quite simple, because all it does is it comes down to the amount of interest you pay, the amount of added interest you are willing to pay, and what kind of insurance you are buying for that extra interest expense. I can tell you, Tariq, dealing with, thousands and thousands of mortgages over the years, that every homeowner moves through their mortgage life the exact same way. The questions are almost identical for everyone. You may get to the question a little differently, but what you're really asking is always the same. And that is, what price am I willing to pay to reduce my risk, and am I willing to live with that consequence? That's why you simply need to look at your perspective the way it is and get a calculation that is relevant for you and your spouse. Now, I will be a salesman here. The reason why the Wealthy Homeowners is cheap as it is for a homeowner is so that you can get this advice detailed for you, your situation, in agreement with your spouse, to keep harmony in your household and allow you to enjoy life better. It is also designed to allow you to earn the highest return as a homeowner on your home equity as possible. But the price is so low for a homeowner. The price is so low that even answering this simple question, you can just simply go to the mortgage broker, if you're using a mortgage broker, and ask them to give you kickback that offset your fee. So that's how I would answer, Tariq. We're always measuring months and months in advance of what everybody else seems to be measuring, not only in house prices or the housing market, but also inflation and mortgage rate. Interest rates would turn into mortgage rates. And, I can't say why everybody else does. I can't say why they're only coming to these conclusions now. All I know is that it's on the record in the House Street archive that we warned exactly what was going to take place, is taking place right now.
Ross, the Canadian Real Estate Association announced the benchmark price for a home had increased 21% in September. A listener wants to know if you can explain how the benchmark price works and should it be trusted.
Well, if you're going to trust a metric that equals the change in the average selling price over the same period of time, go ahead and trust it. Go ahead. When CREA created the benchmark price, how did they get a 21% year-over-year rise in the benchmark price when supposedly there was only a 12% rise in house prices year-over-year in the month of September? How did they get that 21? How did they get 24% just a couple of months ago? Then why is it now dropped to 21%? Well, that's because it equals the average purchase price, the 12-month moving average of the average purchase price, the average selling price, the 12-month moving average. That's all it equals, folks. There is a delay between the way that the methodology was created, which CREA was warned about, which CREA refused to listen. This delay, for some reason or another, was accepted by the board of the Canadian Real Estate Association when they came back with the formula. We warned them that was wrong. Now, the reason we warned them that it was wrong is that prices would be declining while the benchmark price continued to rise. I just told you that the year-over-year price change in September, I think it was 14%, in average selling price, but the benchmark was at 21. Well, guess what was at 21 not too long ago, folks? Just a couple months ago. The 12-month moving average of the average purchase price. The reason why the benchmark price is a con is because it is designed to hide a correcting housing market from home buyers. it is designed to hide commission gains in a year from the Canadian public and government legislators. That is the reason the benchmark price was created in the first place. The documentation that was supplied to real estate boards specifically stated that that was the reason, and it was being done then as a consequence of the house price correction in Ontario from the early 1990s. How can we continue to get our members commission while a housing market is cooling? And is there any way we can reverse the trend in the housing market so that our members can continue to earn commission? That is the role of the benchmark price. This is also the same reason that the Terranut National Bank house benchmark, the Terranut National Bank House Price Index, is 100% identical over the last 14 years of change to the average sales price reported by Korea. Now, supposedly the benchmark price is a theoretical home, and it excludes all the outliers. Supposedly, the Terranut National Bank is only uses repeat sales, only in specific CMAs, and only from specific cities. But they all equal the exact same thing. Why? Because an MLS system is designed with one purpose and one purpose in mind: to allow realtors to extract a commission equal to the average house price gain over a period of 10 years. That is how MLS systems are designed. That's how they function. That is how the benchmark price is calculated the way it is, how the Terranut National Bank House Price Index is calculated the way it is, the way the average price is calculated the way it is, the way the NAIR down in the States is calculated the way it is, the Case-Shiller Index down in the state is calculated the way it is. Every place that you see in the world where you see these house price gains hitting astronomical levels, it's because of the myths that are believed about housing market. The benchmark price is designed to deceive home buyers for the benefit of home sellers. It has worked perfectly for the Canadian Real Estate Association and everyone who has a realtor trademark. Korea was warned that this day would come. It has come. We hope everybody enjoyed the CBC Marketplace report on the unethical behavior in Ontario realtors. And I can tell you, there is much, 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 much more to come.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been homeownership consultant Ross Kay from the wealthyhomeowner.ca. Ross loves to answer your questions, so you can send them to info@housestreet.com and we'll ask that question for you. Find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. You can also find us on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.